Okay, good morning. Good morning, friends. I'm audible?
Yes, sir. Good morning, sir.
Okay. Please, I'm requesting all you people, please mute your mic. Okay, if you have any doubt on the subject, so then you can unmute and you can speak. Okay. So unless, so when I am taking the classes, please try to mute your mic. So otherwise it will be disturbances to all, including me. Okay, so the whole class will be disturbed. So that's why please mute your mic. Okay, so during the session. Okay. So in the yesterday class, of course, we discussed about the just introduction part of the macroeconomics. Like what is the macroeconomics and what is the importance of the study of the macroeconomics and maybe the interdependence of the macroeconomics, like some important the basic points we discussed in the yesterday class. And in today class, okay, in the part of this macroeconomics, okay, in today class we are going to discuss about the concept of the national income. Okay, concept of the national income. So as I said yesterday, national income is nothing but the value of product. Okay, value of the product. That is. So here, what is the product? Production or product, nothing but so final goods and services. Production, nothing but the both goods and services both will come. Goods and services both will come. That's why. So in the definition, I told you that the value of final goods and services. So nothing but value of production. Okay, value of the production. So production, nothing but again goods and services. Final goods and services. What are the final goods? Final goods, nothing but the goods which are available for the consumption. So whatever the goods are ready for the consumption, that goods is known as the final commodities, what we can say. Okay, that is what is called final commodities. Okay, here, this here, value nothing but price. Okay, value nothing but price. Price of the goods and services, that goods and services produced by our country people is considered as national income. That goods and services produced by our people, okay, produced by our people, that is our country people in particular period of time. So that time is 1 year. In particular period of time, nothing but 1 year. So that is in between. So April to March 31st, in between. Okay, from April 1st to March 31st. So during these 12 months, during these 365 days, the total how many goods and services are produced by our country people, So that goods and services, so if we convert it into monetary value, that is, if we multiply with the price of that goods and services, so then we will get the value of the production. That value of the production is considered as the national income. Okay, so as I said already in the yesterday, whenever we are talking about this national income, so there are some important components. Okay, there are some important components are there, like GDP, okay, GNP, NDP, like NNP, and personal income, disposable income, and per capita income. So all these are known as the components of the national income. Okay, concept of the national income, what we can say. Okay, so about these components or concept of the national income, okay, we will try to understand. So the first and the foremost important component of the national income is GDP, that is gross domestic product. It is a very important component. Today, almost all the countries, including India, whenever we are calculating growth rates, comparison with other countries, so everything we are taking in terms of the GDP values only, most probably. Okay, so GDP is very important to understand the economy. So your GDP, nothing but gross domestic product. What is gross domestic product? Okay, what is gross domestic product? Okay, gross domestic product is, again, we are calculating for one particular period of time. That is 1 year. It is for 1 year. So it is for 12 months. It is for 365 days. It is from April 1st to March 31st. April 1st to March 31st. So during this particular period of time, so it is the total value of the final goods and services produced within the boundary of the country is known as the GDP. Okay, in particular period of time, in 1 year, total value, that is price, value nothing but a price. Price of the goods and services, that is the value of the final goods and services. But that goods and services produced within the boundary of the country, within the territorial area of the country. Okay, within the country. Whatever the goods and services produced within our boundary, that goods and services value is considered as a GDP. Okay, nothing. So this is our boundary of the country. Take for example. So in this boundary, goods and services are producing. We know many goods and services are producing. Okay, that goods and services may be produced with Indians plus foreigners. Okay, it may be produced with Indians or foreigners. All the goods which is produced within this limitation, within this boundary, that goods and services value will be considered as GDP. Okay, so means within the boundary means that goods may be produced. See, take for example in our boundary, every day there are so many type of goods and services are producing in our boundary. That goods and services may be produced by with Indians or foreigners also. So even foreigners commodities, production commodities value also included in our GDP. If any foreign people are working in our boundary, okay, if any foreign people, they are working in our boundary, by after working, they are receiving the income. If they will receive the income after working in our boundary, their income also will be included in our GDP. But at the same time, so many people are working the rest of the world other than our boundary, other than our country territorial area. Okay, so other countries, it may be America, it may be England, it may be Canada, it may be Germany, it may be Japan. So in so many countries our people are working. Even though they are our people, even though they are our Indians, but they did not work. They did not working. They did not involving in the production process within our boundary. Since they are not working in our boundary, whatever the income they are receiving, that income is not part of GDP. These 2 points, please remember. Okay, yeah. If any our Indians are working in the rest of the world, they are receiving the income, that income is not the part of our GDP, because they may be Indians, but they did not working in our boundary. Their production is not in our boundary. But according to this definition, whatever the goods and services produced within the boundary of the country, that goods and services only will be taking in the GDP. Okay, since they are working other than our boundary, so their production is not part of, their production value is not part of our GDP. But here, so if any foreign people are working in our country, maybe the person may be foreigner, but that production is producing within our limitation, within our territorial area, within our boundary. So that's why, so that income is going to be included in our GDP. So based on the observation, based on that definition, we can say that foreigners people will income included in the GDP, whereas Indians who are working in the foreign, their income is not part of our GDP. Okay, whenever we are talking about the GDP, this is the formula. To know the GDP, this is the formula. That is, GDP is equal to C plus I plus G. C nothing but consumption expenditure. I nothing but investment expenditure, that is investment. And G nothing but whatever the government is spending on the various activities will come under the G. Okay, consumption expenditure, investment expenditure, and government expenditure. Okay, so the sum of these three will be called GDP. Okay, GDP, gross domestic product. This gross domestic product. Okay, so the mathematically expressing in the equation part, that is C plus I plus whatever you can say G. Okay, that is a consumption expenditure, investment expenditure, and that is called government expenditure. Okay, this is GDP. Okay, all the values are estimating based on the factor cost and also market price. Okay, market price and factor cost. Factor cost is nothing but it is equal to production cost. Okay, factor cost is nothing but equal to production cost. That is. Okay, so when we are expressing the value is equal to the production cost, that value is called price with the factor cost. Value, okay, value, nothing but price. Value, nothing but price. There will be two types of price. Okay, there will be two types of what is called prices. One is market price. Okay, one is market price. The second one is factor cost. Factor cost price. Okay, the factor cost price is equal okay, is equal to, okay, the factor cost price is equal to production cost. Okay, is equal to what is called production cost. That is the point here. Okay, whatever the amount is spending for the production of any commodity in the name of rent, in the name of wages, in the name of interest, in the name of the profit. The sum of these three is equal to factor cost, you know. According to economics, you know, factor cost. What are the factor cost? Land, labor, capital, organization, they are called factor cost. Factor cost nothing but whatever the factors are using for the production is known as the factors. Okay, to produce any goods and services, these four types of factors are required. And nothing but natural resources. It's also known as the land, you know, labor, capital, and organization. Okay, land, labor, capital, and organization. So whatever the amount we are spending for these four factors of production is known as the production cost. So for the land, we are giving rent. For the labor, we are giving wages. For the capital, in the return, we are giving interest. For the organization, we are giving the profit. So sum of these four is equal to factor cost, which is equal to production cost. Okay, which is equal to production cost. So if the price is equal to the sum of these four, if the price is equal to production cost, that price is known as the factor cost price. That value is known as the factor cost value. Okay. So that is the expenditure made by the producer for the production. But once after the completion of the production, when it is selling in the market, immediately the government will impose the taxes on that one. It may be GST or some other taxes. Okay, after the imposing the imposing the taxes, that the value will be increased definitely. Okay, that value, that equal to value will be sold in the market, which is called market price. Okay, the market price, nothing but it is the price. Okay, it is the price paid by consumer to seller is known as the market price. Production cost is definitely different from the what is called a market price. Okay, production cost is equal to factor cost. Whatever the price paid by the consumer to the seller is known as the what is called a market price. Say, for example, here we are producing commodity A. To produce commodity A, the production cost in the name of R plus W plus I plus including profit, it will be around 20 rupees. 20 rupees. Okay, this 20 rupees is equal to factor cost. This price is equal to factor cost. Okay, producer wanted 20 rupees. But immediately, when the producer is selling that commodity in the market, what the government will do? Government will impose GST. Okay, it may be 5% or 10% or 15%, 28%. There are different slabs. Or sales tax, or excise tax, or customs tax if you are importing from other countries. Okay, like the government may impose different type of taxes. Okay, simply you can say taxes. Okay, the tax was included around 5 rupees, something like that, including all taxes, GST, excise tax, whatever may be. Okay, now the price will become a 25 rupees. So the consumer has to pay 25 rupees, not the 20. So yeah, consumer paid price is rupees 25. Okay, consumer paid price is rupees, what is called 25. So this is called market price. This is called factor cost. Okay, this is called factor cost and market price. So that's why, yeah, whenever we are talking about this one, GDP at factor cost nothing but GDP at market price minus indirect taxes like GST and all, and going to be including the what is called subsidies, because sometimes subsidies, for example, there is a gas, okay, there is a 1 rupee kilo rice program, okay, in that particular aspect the subsidies are there. Okay, consumer is paying only 1 rupee to purchase the rice. In the PDS, in the public distribution system, how much consumer is paying? Only 1 rupee. But the production cost of the rice is more than that one. That's why to know that production cost, how much consumer paid, okay, how much consumer paid, and the subsidies. Sometimes if there is no subsidies, we can say 0. If there are subsidies, we can add that amount. Okay, the differences between net indirect tax or indirect tax and the subsidies, so will be called factor cost. So vice versa. GDP at factor price is nothing but GDP factor cost plus indirect tax minus subsidies. Okay, minus subsidies. Okay, at the same time, whenever we are talking about the price with the current year nothing but the estimated year. Suppose we are estimating the national income for 2019-20. So in 2019-20, total how many goods and services produced in that particular year, and what is the price for that goods and services in 2019-20, we will be calculated. So that will be called current year price. That will be called current year. Okay, the estimated year is called current year. Whatever the price is there in that particular year is known as the current year. Base year. Base year nothing but to estimate the national income, the government will select one particular year. Present 2011-12 is the base year. Okay, 2011-12 is the base year. Like that, the government will select 1 year with based on some norms. Okay, so whatever the year selected by the government to estimate the national income, that year will be considered as base year. Okay, whatever the prices were there in that particular year is called base year prices. Okay, here we are estimating the national income with both base year price and current year price. To avoid the inflation, to avoid the fluctuations in the price level, the government of India also estimating the real national income. Okay, the real national income is estimating by the government. So like that, factor cost price, market price, current year price, base year price, like a different type of the prices we can see whenever we are calculating this national income. So after the GDP, the next important component is GNP, gross national product. Previously we discussed about the GDP, gross domestic product. Please remember, gross domestic product we discussed. Domestic nothing but territorial area, boundary of the country. But here, nation nothing but one country people. One country people. So GNP nothing but in particular period of time, again 1 year, April to March. So the total value of the final goods and services produced by one country people is known as GNP. One country people is known as GNP. Okay, in case of the GDP, we are saying that the value of the goods which are produced within the boundary of the country. But here we are saying that the value of the goods and services produced by our country people. Okay, here we are taking only hello, somebody is sharing your screen, please stop it. Okay, so that GNP is nothing but value of the goods and services produced by our country people. So in this case of GNP, so automatically since the value of goods and services produced by our people, our Indians considering, so that foreign people income, okay, foreign people income not included. Please remember here, the foreign people income is not going to be included in the GNP. But our people who are working in the foreign, the Indians who are working in the rest of the world, is going to be included. So all Indians, okay, all Indians' income is going to be included in the national income. That Indian may be working in our boundary or the rest of the world. May be working in our boundary or other countries. But if the person is Indian, whatever the income issued by that Indian will be included in case of the GNP. Okay, this GNP generally is going to be right like this. GNP nothing but C plus I plus G plus R minus P. So nothing but GNP is equal to C plus I plus G. C plus I plus G nothing but it is equal to GDP. Already told you. GDP plus R minus P. Okay, GDP means we know only the value we produced within the boundary will be there. But in this GDP, the foreigner's income is there, no? That's why the foreigner's income is subtracting in the name of the P from the GDP. P nothing but payment to the rest of the world. Okay, P nothing but the payment to other countries. The payment of our people, other peoples. Other means other country people. So because in our GNP, other people income should not be there. But whereas in the GDP, as I said already, other people income also will be included. So that's why from this GDP, we are paying income for the rest of the world people. Other country people. At the same time, in the GDP, if any Indians are working in the foreign, if any Indians are working in other country, they are receiving the income actually. Okay, that income is not part of the GDP as we discussed earlier. But that should be there in our GNP. That's why that income is going to be adding, plus nothing but adding. Okay, the Indians who are working in the rest of the world is going to be adding. And if any foreign people are working and getting the income from India, that is subtracting. So R minus P plus GDP is equal to GNP. That is. So that's why since C plus I plus is equal to GDP, The GNP can written like this following, like GNP is equal to GDP plus or minus P. Okay, like this. Okay, whereas R is nothing but receipt from the rest of the world, receiving income from other countries, and whereas the P is nothing but payment to the rest of the world, payment to other countries. Okay, that is called what is GNP. That is gross national product. We can see. Okay, like that. The one more concept here, NDP. Okay, NDP. Okay, simply NDP is nothing but GDP minus depreciation. Okay, GDP minus depreciation. What is the depreciation here? Depreciation, nothing but the capital consumption. The depreciation, nothing but capital consumption. Depreciation is nothing but fixed capital consumption. Fixed capital consumption. So means capital goods, that is productive goods, that is machineries and equipments, are utilizing in the production process more than one time, more than 1 year, maybe 2 years or 5 years, 10 years, something like that. Okay, whenever we are consuming these capital goods in the production process, that value decreases gradually. That decreased value is known as the depreciation. That's why it is called from the capital, how much we are consuming, that consumed value is equal to depreciation. Okay. So that consumption, capital consumption will be there for the fixed capital only. It will not be there for the variable capital. Because variable capital means it is the capital using only one time in the production process. There it will not be there for the next time. Like raw material and all. They are called variable capital. But whereas machinery and equipments, they are using more than one time in the production process. When we are using more than one time in the production process, automatically, so that commodity value going to be consuming gradually, that consumed value is considered as a depreciation. So from the GDP, if we subtracted the depreciation, we will get NDP. Okay, so that is net value. Here N nothing but net value. Net value nothing but gross value minus depreciation. Okay, G nothing but gross value. The remaining D and P same. Okay, this is G nothing but gross value. So from the gross value, okay, from the gross value, if we subtracted depreciation, okay, then we will get the what is called net value. Okay, net value. The net value will be included here. So NDP nothing but net value. Like even NNP also, it is also net value. Net national product. Okay, it is a net national product, we can say. So N, first N nothing but net value. The second N nothing but national. That is nation or one nation, nothing but one country people. Okay, that country considered as India, that's why all Indians. Okay, P nothing but production, production nothing but final goods and services. So that's why NNP is equal to in a particular period of time. Okay, all the activities are going to be considered or measured for the one particular period of time only. That is 1 year only. So in particular period of time, it is the net value of final goods and services produced by one country people is known as NNP. So this NNP is considered as national income. Okay, this NNP is considered as the national income. particularly. Okay, like here, this from the national income. Okay, from the national income, if we subtracted the corporation taxes and social security contributions and undistributed profit, by adding the transfer of payment, we will get dispose of what is called personal income. Okay, personal income. Personal income, nothing but it is the income received by the people, all the Indians. How much income was received by all the Indians will be considered as the personal income. Okay, to get the personal income, we are going to use this formula. Okay, to get the personal income, we are using the national income minus corporation taxes. What are the corporation taxes? Corporation taxes are the taxes paid by the corporate companies from their total profits. And social security contributions. When the people are contributing some amount to the government for their social security, for their future security, will come under the social security contributions like LIC. People are contributing in the name of LIC. Okay, that means that LIC is nothing but the future security. Okay, PF, Provident Fund, all the employees in the name of CPS or GPS, the government is deducting some amount. So the same amount will give to the employee after the retirement. That's why it is a security. Okay, the type of amount will come. And undistributed profit, if any company got the profit, generally when the company got the profit, immediately from the company to the person it will take. So if the company is not distributing or the share partners are not taking from the company, if any amount, okay, the amount will be remaining with the company. So that amount will be called what is called undistributed profit. For example, take for example any company. Okay, company called A. So in this year it got around 150 crores profit. Okay, 150 crores profit. Let's example. Generally, when the company got the profit, immediately the partners will distribute a total profit automatically. Total amount, distribution amount will be profits will be distributed among the what is called people in general. But here what happened now? Out of this one, 130 crores was distributed. Okay, distributed among the share partners. The remaining 20 crores was the remaining with the company account. In the company account only it was there. So this 20 crores is known as undistributed profit. Still, it is there in the name of the company, but not received by the person. Personal income, nothing but received income by the persons. Okay, since it was not received by the person, still it was there in the name of the company. So that's why that company, that amount was known as undistributed profit. And transfer of payment. What is the transfer of payment? If the government is giving direct benefit to cash benefits to the people without expecting anything is known as the transfer of payments. Nothing but welfare we can say. Okay, there we can see scholarships. Okay, like old age pension. Okay, old age pension. Maybe unemployment pension. Okay, all this amount given by the government to the people directly without expecting any type of services from the people. Okay, that is known as the transfer of payment. So that transfer of payment adding to the national income to get the personal income. And from the personal income, if we subtracted personal taxes, we will get the disposable income. We'll get the disposable income. Okay, from the personal income, we are subtracting the personal taxes. That is called direct taxes. Direct taxes other than corporation tax. Other than the corporation tax. Why? Because in the personal income, corporation tax was not included. Because from the national income, after subtracting the corporation tax only, we will get the personal income. Okay, the personal income already paid. That's why again here need not to pay. So that's why personal income minus personal taxes. Personal taxes nothing but they are the taxes paid by the persons directly to the government. That is direct taxes. Corporation tax is a direct tax, but it is not paid by the person, it is paid by the company. Okay, direct taxes paid by the persons has to take here. So that's why personal taxes nothing but direct taxes paid by individuals. Okay, individuals. Like we can say income tax, you can say professional tax, okay, we can say wealth tax, property tax, etc. Okay, all this type of the taxes, if we subtracted from the personal income, then we will get the disposable income. Disposable income is the income available for the spending. This amount is only, okay, this amount only available for the spending, for the expenditure. For the spending or for the expenditure, this amount only we are going to be considered. So then the next one is per capita income. Per capita income. So per capita income also one of the concept of the national income. Okay, per capita income is also going to be calculated for the particular period of time. That is, in particular period of time, nothing but 1 year. Okay, it is the average income of one country people is known as the per capita income. Okay, in particular period of time, that is in particular 1 year, what is the per head income? What is the average income of the people? The average income of the people will be considered as a national income. Sorry, per capita income. Per head income. Okay, it is a per head income. Okay, average, how you will get income of all people divided by all people. Income of all people is called national income. That's why national income by people of the country is called per capita income. So that's why per capita income is equal to total income of the country divided by total people of the country. So total income of the country nothing but national income. Okay, it is called a national income. National income divided by population of the country. That is population. So if we divided national income with population, okay, then we will get the what is called a per capita income. Okay, the per capita income is going to be get. So these are the components of the what is called a national income. Okay, in this aspect, if you have any doubt, please ask me. Regarding the subject, if you have any doubt, please ask me.
Sir, GDP అంటే ఇప్పుడు మనకి CGI అని చెప్పారు కదా సార్, కన్జ్యూమర్ ఎక్స్పెండిచర్ ప్లస్ గవర్నమెంట్ ఎక్స్పెండిచర్ ప్లస్ ఇన్వెస్ట్మెంట్ ఎక్స్పెండిచర్ అని.
Okay, tell me.
Hello.
GDP nothing but consumption
Sir,
expenditure, investment expenditure, government expenditure. Yeah.
investment expenditure, a type of investment, sir, like business investment, personal
Investment nothing but whatever the amount we are spending to produce the commodities or services is called investment.
ఓకే. అప్పుడైతే కన్సంప్షన్ ఎక్స్‌పెండిచర్‌లో ఇన్వెస్ట్‌మెంట్ ఉంటది కదా సార్. ఏమైనా ఇన్వెస్ట్ చేస్తేనే మనం ఏమన్నా ప్రొడ్యూస్ అయ్యి అది కన్జ్యూమ్ అవుతది. రైట్?
ఇప్పుడు నువ్వు కన్జ్యూమ్ చేస్తున్నావు అంటే వస్తువును కొంటున్నావు. ఇప్పుడు ఒక చిన్న ఎగ్జాంపుల్ చెప్తా చూడండి. సపోజ్ you are purchasing the mobile. Okay, you spend around 5,000 rupees to purchase the mobile. That amount is called consumption. Okay, but here the seller, what he will do? The seller will spend around 1,000 rupees or 2,000 rupees to purchase the raw material. Okay, raw material కొనుగోలు చేయడానికి ఖర్చు పెడితేనేమో ఇన్వెస్ట్మెంట్ అవుతుంది. వస్తువును వినియోగించడానికి ఖర్చు పెడితేనేమో కన్సంప్షన్ ఎక్స్పెండిచర్ అవుతుంది. దట్ ఈస్ ద డిఫరెన్సెస్ బిట్వీన్ దీస్ టూ. ఓకే
ఓకే సార్.
టెల్ మీ
సార్. ఇప్పుడు నేషనల్ ఇన్కమ్ లో 1 కంట్రీ పీపుల్ ఈజ్ ఈక్వల్ టు 1 ఇండియన్స్ అని ఇచ్చారు కదా సార్. నెట్ నేషనల్ ప్రోడక్ట్ లో అంటే వరల్డ్ వైడ్ గా దీనికి దానికి కంపారిజన్స్ ఉండవా సార్?
ఉంటుంది. ఇప్పుడు మనం ఇండియా గురించి మాట్లాడుతూ 1 కంట్రీ పీపుల్, యూ టేక్ ఎనీ 1 కంట్రీ, దట్స్ ఆల్. బట్ ఇక్కడ నేనేం చేసినాను, సిన్స్ వీఆర్ ఇండియన్స్, ఐ టేకన్ ద ఇండియా యాజ్ ఎగ్జాంపుల్. లైక్ దట్ అమెరికా వాళ్ళు ఏం చేస్తారు, అమెరికన్ పీపుల్ ఒకరిని తీసుకుంటారు. జపాన్ వాళ్ళు జపానీస్ పీపుల్ మాత్రం తీసుకుంటారు. సో కాబట్టి వాళ్ళ ఇన్కమ్ మన ఇన్కమ్ తర్వాత కంపేర్ చేసుకోవచ్చు. వాళ్ళది ఎక్కువ మన తక్కువ. ఈ రోజు అమెరికా ఇన్కమ్ ఇస్ మోర్ దాన్ ద ఇండియా ఇన్కమ్ అనేసి అంటున్నాం కదా. కాబట్టి ఇక్కడ వెన్ వీఆర్ టాకింగ్ అబౌట్ అవర్ నేషనల్ ఇన్కమ్, we are going to be calculating the income of our people only. That is Indians only. Like that, if Americans are estimating the national income, they will calculate 1 country people. So in their opinion, 1 country people nothing but all Americans, like that. Okay
సార్. కానీ కొన్ని కాయిన్స్ కరెన్సీస్ ఉంటాయి కదా సార్ మనవి, అప్పుడు ఎక్స్చేంజెస్ ఇవన్నీ చేసేటప్పుడు కూడా ఈ నేషనల్ ప్రోడక్ట్ అనేది వస్తుంది కదా సార్, నెట్ నేషనల్ ఇన్కమ్ ప్రోడక్ట్.
మనకు దట్ కాన్సెప్ట్ ఈస్ డిఫరెంట్. Okay, that concept is different. Suppose you are producing 1 country from India. After producing the commodities in India, that value always will be calculated in terms of the rupee only. Why you will take the dollar here? ఇండియాలో కాల్కులేషన్ చేసుకున్నంత వరకు రూపాయి గురించి మాట్లాడతాం, డాలర్ మనకెందుకు? When there was an international transaction for some other aspect, then we will try to convert it into the international currency. Then also, suppose you are talking about the dollar దాంట్లో ఏదో వాల్యూ ఉంది. Suppose you imported one commodity America, that commodity value is $2. Okay, then $2 means $1 is equal to around, we can say 75 rupees. So nothing but $2 is equal to, we can say 150 rupees. So like that we are converting into rupees and explaining. Okay?
Okay sir, thank you sir.
Okay. Any doubt?